Good afternoon, ladies and gentlemen. I will call the Sales Tax Subcommittee of the House Ways and Means Committee to order this afternoon. Only be proper to recognize our Ways and Means Chairman Blackman. He's going to give us a 30-minute welcome, Mr. Chairman. No, yes, sir. The Chairman is ready to go. No, all seriousness, welcome. I believe, Mr. Chairman, this is our first subcommittee of Ways and Means this session, is it not? So if I can, on the chairman's behalf, we try to vet all the bills in subcommittee. I think they'll be back to back this afternoon. This will be a hearing only on the bill. That's no reflection on the language of this bill particularly, but the chairman's policy, unless there's something overriding, is to sound it before the subcommittee so that we get another view of it and can work all of the issues, if there are any, out in subcommittee. So when it gets to full committee, it would be smooth. So that is our intention today. We have before us a resolution, House Resolution 66, to ratify the governor's executive order. I don't see the LC on here, but I'm told I went 124. There we go. I'm looking at, all right. So we have House Resolution 66 LC 432565-EC. You all should have that on your electronic device. And with that, if there's no objection, I'll go straight to the governor's floor leader, Representative Gamble. Tell us about your proposition.
Chairman, members of the committee, it's good to be with you today, and I'm just spending my day with you, Mr. Chairman. We were just together.
We got to get you out more.
Yeah, I know it. But this is a resolution to ratify the governor's executive orders to suspend the collection of motor fuel and diesel fuel taxes. You remember that following the Governor and General Assembly's bipartisan efforts last year, legislative session with House Bill 304 and the governor's ensuing executive orders, this resolution would simply just ratify the governor's executive orders to temporarily suspend the collection of motor fuel and diesel fuel taxes. As y'all all aware of, the governor's actions delivered much needed temporary relief to Georgians at the pump, which saved taxpayers over $1 billion and roughly $150 million to $170 million per month. Moreover, the governor's action has kept our economy open and strong as we Georgians have collectively responded to the record inflation and during these stressful times. So, it's procedural mostly. Y'all know that the gas tax was around 29 cents per gallon on fuel, unleaded gas, and 32.6% on diesel. And that, in essence, Mr. Chairman, is what this bill does. Also have our Department of the Revenue Commissioner Frank O'Connell with us here today, who is also able to answer questions that you might have if it's more of a technical nature.
This is a more anecdotal question. In case this takes 91 votes on the floor of the House, right? In case we can't get to that, how is the governor fixed financially to personally make good? No, I'm just a little light comment. No, you've done a great job doing this. This is something that's come before the House over time for ratification of these. Are there any questions of the governor's floor leader, Representative Gamble? I see no questions. You're welcome to bring your technical expert forward if they'd like to weigh in. We'll take them. But otherwise, I think everybody on the subcommittee is fairly yeah, we're good with this.
Okay.
So I just wanted to give them the opportunity.
Yeah, absolutely. Thank you.
Anyone have any questions of the gentleman? Anyone have any questions? This is before us for a first hearing. So, take a look at it. If you have any issues, I'm fairly certain the language is as we need it. So thank you very much. There are no questions. We'll close the first hearing on this, and you'll be, we now have one. I'm sorry. No, we're closing. I'm going to hand this over to the next thing. Thank you very much. We'll close hearing out, and the chairman will let you know through his staff when to come back before the committee next time. Thank you. You've done a great job. There's no further business for the sales tax committee, right? I have no further business before the Sales Tax Committee. If there's not objection, we'll stand adjourned. I see no objections. The Sales Tax Committee is adjourned. Yes, sir.
Thanks, sir. You got 'em? We're gonna open the Public Policy Finance Committee. And we're going to hear one bill today, and that's gonna be House Bill 36. And Chairman Martin, you have the floor.
Thank you, Chairman Stevens. This is House Bill 36 LC 4324 89. We heard this bill last year and passed it out. It passed the House. It passed Senate Finance, and it just got lost, as tends to happen in Senate rules on the last days. What this does substantially is add a section on line 30 through 33, if you recall, to allow folks the option of appealing directly to a hearing officer rather than the Board of Equalization if their tangible personal property is valued in excess to 200,000. What we find out is in complex personal property in a manufacturing environment, so forth, if there's a disagreement on that and you go to the Board of Equalization, you have three citizens like us, they typically don't know about, complex, manufacturing equipment, personal property. So they end up not coming to a good agreement, and then they have to go to Superior Court. So this gives the taxpayer the right to go to a hearing officer who's going to be a little bit more knowledgeable, try to get to an answer right there and unclog the Superior Court system. Again, we voted this out previously. I've had some conversations about the level of 200,000. That's what we passed out last year. There's some question about going up on that number a bit. And we'll be in discussion on that as we move forward to our second hearing. We're trying to find the right things, but since there's one or more account numbers, we're not exactly sure what constitutes an account. If you're looking at manufacturing equipment, if it's the entire process, then a higher number probably works. If it's broken down in say an HVAC system, if it's just the compressor, then it may need to be 200,000 in a large building to do that. So with that, it's the same bill we've heard before. I'll answer any questions if they have them.
Any questions of the author? Then we will move on to since the commissioner's here. Being the first hearing only, we'll come back to that one probably tomorrow. We're going to move on to the IRC update, and we're going to turn Chairman Knight on.
Thank you. Members of the committee, it will be House Bill 95, but what we will have, and we do not have it in front of you, is a committee substitute. But what we do have available, if I'm not mistaken, and it will be on. Are we doing this online? As you know, we have the tracking sheet as far as the changes. What I'll say is this is one of the smallest as far as dollar amounts of amount of change to our budget from a point of view of what we're adding and subtracting as we reconcile with the federal tax changes from last year. But with that, we had Department of Revenue here today, and Commissioner O'Connell, if you will you come and go through these changes or track through this with us? Yeah, if you could, Commissioner, yeah, that end right there. Okay. All right. And again, real quick, if we'll hold on, I think we're going to get the tracking sheets in front of everyone. Oh, sorry.
Thank you, Mr. Chairman and members of the committee. My name is Austin Gibbons. I have the pleasure of serving as Director of External Affairs and Communications for DOR. So we are here to present what will be House Bill 95, which is the Internal Revenue Code update. This is a little later than we typically present, but the 4,000-page federal bill at the end of last year sort of pushed us back a little bit. But this includes changes to the federal tax code that impact the state of Georgia through the Consolidated Appropriations Act and the Inflation Reduction Act. Those changes are the lowest revenue impact to the state that the commissioner says he has seen in 20 years here with DOR. I'm joined by, obviously, the Commissioner, Kelsey Finn, our Director of Income Tax Policy. Jarder Gao, our staff attorney, is online to answer any real detailed questions, but they've been combing through the IRA and the Consolidated Appropriations Act and will be ready to kind of explain the ones with greatest revenue impact over $1 million, and then any other questions that may arise today and between subcommittee hearings, in full committee, et cetera. We are always happy to provide answers there. So, Kelsey.
Yeah, so I'm gonna run through only 7 larger. All right, can you guys hear me? I'm gonna run through about 7 of them that have.
Kelsey, get a little closer.
No
Yeah,
worries.
make sure your light's on.
Is it on?
All right,
Just
a little
Okay.
closer.
Is that better?
Much
Okay.
better.
So the first section is section 101. It was expanding automatic enrollment and retirement plans. Section 101 requires 401k and 403b plans to automatically enroll participants in their respective plans upon becoming eligible. And the employers can opt out. Automatic enrollment in 401k and 403b plans affects the timing of Georgia tax revenue because more taxpayers can defer their taxable income. Section 107 is an increase in age for required beginning date for mandatory distributions. It further increases the required minimum distribution age to 73 starting on January 1st, 2023, and then increases the age further to 75 starting on January 1st, 2033. Section 110 is treatment of student loan payments as elective deferrals for purposes of matching contributions. Section 110 is intended to assist employees who may not be able to save for retirement because they're overwhelmed with student loan payments and thus are missing out on the matching contributions offered. Section 110 allows such employees to receive those matching contributions by reason of repaying their student loans. Section 331 is special rules for use of retirement funds in connection with qualified federally declared disasters. Section 331 provides permanent rules relating to the use of retirement funds. In the case of a federally declared disaster, the permanent rule allows up to $22,000 to be distributed from employer retirement plans or IRAs for affected individuals. Georgia does not administer rules relating to the use of retirement funds in the case of a federally declared disaster, but the change may affect the timing of Georgia taxable income. Section 603 is elected deferrals, generally limited to regular contribution limit. Under current law, catch-up contributions to a qualified retirement plan can be made on a pre-tax or Roth basis if permitted by the plan sponsor. Section 603 provides all catch-up contributions to qualified retirement plans are subject to Roth tax treatment effective for taxable years beginning after December 31st, 2023. Making catch-up contributions subject to Roth tax treatment can affect the tax base. Section 604, under current law, it's the optional treatment of employer matching or non-elected contributions as Roth contributions. Under current law, plan sponsors are not permitted to provide employer matching contributions in their 401k, 403b, and government 457b plans on a Roth basis. Matching contributions must be on a pre-tax basis only. Section 604 allows defined contribution plans to provide participants the option of receiving matching contributions on a Roth basis, and it's effective on the date of enactment of the act. Allowing Roth tax treatment will affect the tax base. But overall, the total for the Consolidated Appropriations Act that affected Georgia is It's less than 11 million per year, so it's, or through the years, they're 11.42 and 11.14, so still smaller than most. And then the Inflation Reduction Act, there's only one section that would affect Georgia, the accelerated cost recovery for green building property. The new law, the Inflation Reduction Act, lowered the minimum EECB efficiency standard required for deduction benefits from a 50% reduction in total annual energy and power costs to a 25% reduction. The act modified the formula for calculating the maximum deduction. Georgia has limits on depreciation for certain real property under IRC sections 179, which is where it would impact Georgia.
Also, is this your first presentation in
Yes.
front of the Ways and Means Committee?
Any committee.
Any committee? Well, I want to congratulate you because I'm looking out there and their eyes are just glazed over with this, very, very exciting information on tax code. So, no, thank you for feedback. Yeah. Yeah. No, thank you, Kelsey. And we appreciate the department being here. Again, I've been carrying this bill for a number of years. I was talking to the commissioner, how many, but this is one of the smallest, again, bills as far as the effect on the budget that I've seen. I mean, we've had some that are in the hundreds of millions of dollars. And again, this total net effect is about $1 million a year. And a lot of these changes are deferrals, timing issues, but again, probably one of the most simple IRC update bills that I've seen probably since I've been here, and I appreciate that. But if there are any questions, or Mr. Chairman, you want to
I
see if
think
there's questions?
Chairman Blackman might have a question.
Chairman Knight really already said it pretty well, but we got this update, last night. And we turned Kelsey into John Foster in about an hour's time. So let's give her a hand for her first time having.
Very good.
Thank you.
Chairman Knight, you back.
One comment I want to make, and I know, speaking with Chairman Blackman and members of the committee know, and a lot of folks out there, appreciate y'all allowing us to do this first hearing as we go over this. We'll be
you were at 10,500 and you could only get a benefit up to 10,000, well, you didn't get a benefit from that other 500.
So getting the 500 back wouldn't be a advantage. Fair
Yes,
enough.
and we'll see if, I'd be surprised if what they issued changes that, but we'll certainly take a look at that.
Thank you.
Anyone else for the good of the cause today? Then we will adjourn the Public Policy and Finance Committee, and we'll move on to the next committee.